Good day. Thank you for joining me. I'm Warren Davison and I'll be taking you through the September 2020 PSG Wealth Offshore Fund performance. Setting the macro theme, global equities gained in Q3, but regional performance diverged with Asia and the US outperforming Europe and the UK. US shares gained in Q3 supported by signs of economic recovery and loose monetary policy. The Federal Reserve will now use average inflation targeting in setting interest rates, allowing for temporary overshoots in inflation. Eurozone shares were virtually flat, lagging global markets as COVID-19 infections rose sharply in several countries and local restrictions to curb the virus were reintroduced. UK equities fell during the period, extending their year-to-date underperformance of other regions, with the market's significant exposure to poorly performing stocks in the oil and financial sector proving unhelpful. Japanese shares gained over the quarter, despite the yen strengthening. Emerging markets equities advanced in Q3, despite a further acceleration in new cases for COVID-19 in certain countries and escalation in US-China trade tension. In fixed income, government bond yields were generally unchanged, although European yields fell, meaning a price rise after the news of the $750 billion recovery fund was announced. Corporate bonds had a positive quarter. Looking at another matrix breaking down the fixed income indices into the different maturities as well as government, corporate and high yield. In the US, the biggest gainers we saw long duration government bonds adding positively, while long duration high yield bonds felt some pressure. Just a reminder of the PSG philosophy. Our objective is not to back one horse, but to spread the bet across horses which we feel have a competitive advantage at what they do, whether it be their thinking, their style, etc. We then combine these to produce a final portfolio solution which looks to achieve our three pillars of consistent above average performance, at below average risk, and at a competitive price relative to peers. Looking at the PSG portfolios, here I show a month-by-month AUM growth for the global funds. September produced more positive net flows, with the current AUM sitting at $1.58 billion. Looking at the asset allocation, the PSG Wealth Global Fund of Funds are multi-asset portfolios and therefore include both equity and fixed income investments. Within the fixed income, this asset class will include exposures to government, corporates, and high yield fixed income, and will react accordingly within their portfolio. Looking at some highlights. Through the turbulent times that we've seen, the PSG selected managers have maintained consistent performance, with 73% of the underlying managers outperforming the peer group over a 6-month period. Extending this out over 3 years, we see 92% of our underlying managers outperforming the peer group. Looking at the PSG Wealth Risk Radar, 6 of the prior 7 funds which appeared last month have been removed from the risk radar, illustrating a better month for the solutions. Looking at the individual fund performance, and starting with the Global Reserva, the fund dropped 1.04% in September, underperforming its sector for the month by 21 basis points. The fund remains behind the sector over the recommended holding period of 3 years, however, is closing that gap. Extending it out over the since inception period, here we can see that the fund is once again above the sector average. Looking at the 3-year chart, I've highlighted the year-to-date performance, showing how the fund reacted during the volatility experienced this year. Due to the fund holding higher exposure to higher yielding dividend and fixed income securities, it has also felt some of the pressure over the shorter term. Given the low interest rate environment, Our underlying managers were searching for yield and therefore positioned themselves in better risk-adjusted return asset classes. We do believe that over the longer term, this yield pickup will continue and the managers will get rewarded for taking the additional risk. Onto the global moderate. The fund dropped 2.2% in September, but still managed to outperform its sector by 86 basis points. The fund is above its benchmark over the recommended holding period of 5 years and since inception by 96 basis points and 30 basis points respectively. Again, we look at the 3-year chart, highlighting the year-to-date performance. Here we can see that the fund has tracked its custom benchmark quite nicely and managed to capture some of that upside performance. Onto the global flexible. The fund dropped 1.96% for September and fortunately underperformed its sector by 16 basis points. However, looking out over its longer-term 7-year investment period, as well as since inception, we can see that the fund has produced alpha of 5.85 and 6.16% respectively. On a year-to-date basis, here we can see that the fund continues to outperform the sector and has widened the gap, producing significant results. For the global creator, the fund dropped 3.3% in September, underperforming its sector by 16 basis points. The fund has outperformed the sector over a recommended investment horizon of 7 years and above Morningstar Global Large Cap Blended Equity Sector Average since inception. The 3-year chart again shows how the fund has performed during the volatile times, and as we can see, the fund managed to benefit with a maximum drawdown lower than that of the sector average and still managed to produce new highs during September. Just to conclude, the peer group rankings remain strong across the board, with the longer term numbers producing favorable results. 5 of the 6 funds have produced average and above average performance over the recommended holding period respectively. To tie this all together, we can see that PSG Multi-Management is achieving their 3-pillar approach. For the global moderate, which has lagged previously, the action has been taken and are starting to bear the fruit. For the remaining 3 funds, each has delivered on its 3 pillars of consistent above average performance at below average risk and at a competitive price. Thank you. Please do take note of the following disclaimer.